Hello everyone, this is Brian Rezny, President of Rezny Wealth Management, with an important update on the economy and investment markets. Today I want to address the recent escalation in geopolitical tensions between Israel and Iran, how the markets have reacted, and why staying calm and focused is critical for long-term investors. Over the past week, the Middle East has seen heightened conflict. On Friday, Israel launched large-scale airstrikes targeting Iran's nuclear and military facilities, prompting retaliatory missile and drone strikes from Iran. This back and forth, now in its fourth day as of today, June 16th, has understandably raised concerns about regional stability and the potential for a broader conflict. Let's talk about how the markets have responded. The most immediate impact has been on oil prices. On Friday, crude oil prices surged by as much as 7%, with Brent crude briefly climbing 5.5% in early trading on Monday, before paring back most of those gains. This volatility reflects fears that the conflict could disrupt oil supplies if it escalates further. Meanwhile, global equities took a hit, with sharp declines on Friday as investors adopted a risk-off stance. The market's fear gauge, the VX, spiked 21% early that day, signaling heightened uncertainty. However, by Monday, we've seen signs of resilience. European stock markets opened slightly higher today, and oil prices have stabilized within their year-to-date range. In fact, some analysts note that the market's reaction, while sharp, has been relatively contained compared to past geopolitical shocks, suggesting a degree of investor confidence in avoiding a wider war. Now let's put this in perspective. Geopolitical events, while unsettling, are unfortunately a recurring part of the global landscape. From wars to trade disputes, the investment markets have faced these challenges for centuries, and they've persevered. Why? Because markets are driven by fundamentals: corporate earnings, economic growth, and innovation. Short-term volatility, like what we've seen this week, is normal. It's the price of admission for long-term wealth creation. At Rezny Wealth Management, we remind our clients that staying calm during these moments is paramount. Panic selling or chasing short-term trends can derail your financial goals. The data from this week shows that while markets wobbled, they've already begun to stabilize. For example, despite Friday's sell-off, the fact that stocks in Europe ticked up today and oil prices didn't sustain their spike suggests investors are cautiously optimistic about de-escalation. History backs this up. Whether it was the Gulf War, 9/11, or more recent conflicts, markets have always recovered by focusing on the long term. That's why we at Rezny Wealth Management stay on top of our game. Our team is constantly monitoring global events, economic data, and market signals to ensure we're appropriately positioning and managing our clients' assets for the long haul. To our clients watching, know this: volatility is normal and geopolitical events are part of the investing landscape. Our disciplined, proactive approach to money management helps guide your portfolio and is built to weather storms like this one. If you have questions, please reach out to our team at Rezny Wealth Management. Stay calm, stay focused, and let's keep building your financial future together.